I was wrong about Palantir. Over the past 1 year, it jumped up about 295%. That PE ratio, though, is nuts at up over 330. Palantir is an exciting company, but is that PE ratio just too high to actually be investing into it? Palantir's new contracts often receive a great deal of attention from the media. In December, for example, it was announced that the US Army, which has been working with Palantir since 2018, had extended the partnership with a $600 million contract for 4 years. On December 6, Palantir and Endural announced a partnership to ensure the US government is a leader in AI. In fact, this partnership has the plan to ensure that all government data collected can also be used to work with. Only Palantir can ensure that this highly confidential data is handled with the utmost care while delivering excellent results. This is one of the biggest competitive advantages that exists today. Palantir is just the leader in a fast-growing market. Palantir's growth has accelerated in recent quarters thanks to the fast-growing demand for the company's artificial intelligence platform, which allows governments and organizations to integrate generative AI into their operations. It's worth noting that this platform was ranked as the top AI ML platform by market research firm Forrester last year, ahead of well-established names such as Microsoft, Amazon, and IBM. A couple months ago, I put out a video explaining that I really like Palantir, but that the valuation was risky, and at the time, I was waiting for it to drop a little bit before I got in. I think it was somewhere around $40, and I was listening to a couple of analysts and other people that were using correct formulas to try to evaluate this company, and the correct valuation should have been somewhere in the 20s or something, and so I said I'd like it to get down closer to like 30 for me to jump in. Later on that week, the company came out with its current earnings report and absolutely blew everything out of the water, and since then, this company has just been skyrocketing. Now Palantir's in the mid-60s and gone as high as the 80s in the recent weeks, so I was definitely wrong about it dropping that far. And so I'll explain why Palantir hasn't dropped dramatically even though its PE ratio is through the roof, and how you can invest into it safely to keep your portfolio strong but also get that upside. My name's Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Now Palantir is definitely at the top of my list for stocks that I'm going to be investing in for this year. I also want you to be safe daily, so let me thank and introduce the sponsor of this video, Delete Me. Did you know that your data is being sold online by data brokers? You have the right to stay private and protect your personal data. Delete Me is a hands-free subscription service that will remove your personal information that's being sold online. Right now, it's becoming all too common of this trend of data breaches resulting in the loss of personal data control. 1/3 of the US population's background info is now public. Delete Me's privacy experts remove your personal information such as phone number, address, and other important information from hundreds of data brokers all year long. I really enjoy that customers can make custom removal requests. We all do a lot online, especially financially with investing, so it's just a smart move to have an extra layer of protection. Get 20% off Delete Me US consumer plans when you go down to the link in my description, which is joindeleteme.com/professor, and use code PROFESSOR at checkout. So here's the thing. The PE ratio up over 300 is an issue. Usually you don't want to be investing into a company with a PE higher than 20 or 25. Nowadays though, these ultra growth companies are just flipping that on its head. Tesla was always one that I knew in the back of my mind made a lot of sense to invest in because of how massive of an idea Tesla was, not only with the electric vehicles, but more so in the charging networks and battery intellectual property. I was doing my MBA at the time and learning formulas and correct investing measures, so that high PE ratio of Tesla kept me out of investing in it. Tesla had a PE over 1,000 at one time and was very high for a while, but the concept made sense and the technology was unmatched. It just took a little while for the earnings to catch up. Adjusted for the price splits that have happened over the past couple of years with Tesla stock, the price I would have gotten into Tesla would have been around $15 to $16. Today, Tesla's up almost to $400. If I would have invested $10,000 at that time, when I had the feeling in my gut back then, today that would be worth $250,000. Now, just because Tesla did that doesn't mean that Palantir or other types of stocks with super high PE ratios do that. More often than not, The types of companies that have too high of PE ratios are very, very risky for investors, and investors do lose a lot of money. But I do have that gut feeling that I had about Tesla back then, right now for Palantir. And so over the past couple of months and continuing through 2025, I'm going to be doing dollar cost average style investing, where I invest a small portion every single month and see what happens. I'm cautious right now because I do believe that the company's still getting its footing and it will be volatile. I do think that it could drop anywhere from 30 to 40% or skyrocket up another 100% this year. It's definitely overhyped by a lot of YouTubers and bloggers and even analysts. So again, I do see a lot of volatility this year and probably next year, but long term, I think Palantir is a must. Another huge reason that I see this stock absolutely blowing up to the moon is because of Trump coming into office in the next couple of weeks. Several members of the incoming Trump administration have ties to Palantir. They include David Sachs, tapped as the White House artificial intelligence and crypto czar, tech industry maverick Elon Musk. Sachs and Thiel helped launch PayPal, becoming part of the so-called PayPal mafia. Musk is a key Trump advisor. Palantir has provided data analytics tools to government customers for intelligence gathering, counterterrorism, and military purposes. Now Palantir aims to use generative AI to spur growth in the US commercial market. One reason for Palantir's post-election rally could be views that artificial intelligence will play a bigger role in homeland security or defense spending. So how can you invest in Palantir the most safe way possible? Well, investing in any individual stock is very risky, but especially when that stock is quite overvalued. So if you choose to invest directly into this stock, keep it to a small portion of your portfolio. Even though I highly believe in Palantir and I really like it for my portfolio, I actually only have about 1% or so of my portfolio in Palantir in total. The safest way that you can invest into it, though, is what I teach here on this channel all the time. It's the most safe and simple way for you to invest just in general. It keeps you very hands-off, but also gives you exposure to these types of companies. Last year, in 2024, Palantir was added to a couple of notable indexes. The S&P 500 added Palantir, and it's actually number 70 of the 500 or so companies by market cap. It makes up 0.28% of the S&P 500, so if you invest $10,000 in the S&P 500, you actually have $28 in Palantir. If you want even more exposure, the NASDAQ 100 just added Palantir as well. Palantir is the 23rd largest company in the NASDAQ 100 by market cap, and it represents 0.94% of the fund. If you have $10,000 in that one, that means you have $94 in Palantir. My favorite ETF that tracks the NASDAQ 100 is QQQM. Palantir is also in my other favorite growth ETF, SCHG, and is the 31st largest company in that fund at 0.46% of the ETF. As Palantir continues to grow, so will the size of it within those ETFs. And so if you hold those, that just means your exposure will be higher, which means you're going to gain so much because of that. This is why I love ETFs so much and why I teach you so much about the 3 ETF portfolio that I talk about on this channel. Check out this video to learn more about that and specifically how much by percentage of each of the 3 ETF categories you should own based on your age. And then watch this video to keep you going strong in your investing journey.